Happy Monday, wonderful day, week to all. Please give me some okay that you can hear me, that you can see my screen. Wonderful, thank you very much. So, how was your weekend, guys? Did you have some good rest, some good sleep, some good recovery, some good time with your family, friends? Watching the watching WWE WrestleMania. Well, that also was part of the weekend indeed. I used to watch that years ago. Wow. Now that's interesting. Who won there, by the way? Who are the people there now? Anyway, all right, good. So I'm happy to hear you. You spent some quality time. Let's begin, guys. So first of all, welcome to all wonderful week wishes. For all those who watch for the first time, welcome to our family. A few things I do recommend to do. First of all, inside the members area, in the video tour, you can find the explanation how to enjoy the members area of the club. And not less important, this is the trading report that you will receive after the live trading room. Okay. Now, this trading report is a summary of what we discussed here. This video explains how to use the trading report. What you can find here is the most important webinars list of what we talk here. The same trading techniques that we work with rely on cycles, divergences, convergences, and the combination of all together. Here you have the watch list of all the instruments discussed. So any single time frame you click, basically you would see what is our trading plan. Okay, so you just go click and it opens the screen for you. And below you will find the basically little more detailed explanation of all the instruments above from here, from the table. Okay, in terms of time frames, what do we have? What do we see? Now, one little tip before I move on: do not just, unless you understand the techniques completely and you know exactly how my creative imagination brain works, don't rely on the report completely and blindly. Just when on your ability, watch the live trading rooms or its recordings, or at least highlights, so you understand the explanation. On the report I can draw, I can't explain. And in order to understand the techniques, you better watch the video, the live meetings, okay, or its recordings. I really don't care how you prefer to do it, everything on your availability. So let's begin our list for today. What we do is we go over the setups we had from last week, of course, update, upgrade, follow up, and so on, and we will build the new list, and the report you would receive slightly later as we finish the live room. I will go and work on that for you. So let's begin. The first pairs would be the European pairs as the previous week, exactly same beginning. We have for this week the European pairs mostly as interesting ones to follow. Some of them for short term, some of them for long term, some of them for both. So let's begin. The first one is the euro versus the dollar. What we have on this pair is basically pure preparation for the rallies to take place soon. The reason for that is basically this double cycle that the euro has, a bullish divergence forming. It's a question of time when the bulls will have more power than the bears in that case. It could happen starting from this week. It could try to create lower lows for us first of all, few more false breaks, and then turn around. Of course, it's a possibility. However, this level is the level that we will see a fight around. If there will be drops, they will resist. They will be resisted by the buyers. On a daily chart, each of the weekly legs was a cycle by itself on the daily. That could be broken into such categories, doesn't matter. Bullish divergence is there on each of the cycles. This is the first weekly leg, this is the second weekly leg. Each of the legs is a cycle by itself on a daily time frame with divergence by itself. And more importantly, we had a bullish convergence already created on the euro dollar. After such say, the market has for us, this is a say, that the bulls are preparing their action. That's what it means. And that might be after little drops, sometimes after deeper drops, sometimes even after one more false break. It doesn't change the picture. This is where the bulls show their interest. End of cycle, false breaks, and the higher highs. These volumes mean the interest of the buyers. So we basically expect a corrective cycle. Corrective cycle could be two waves. Corrective cycle could be simply a range. Everything is possible. No one can predict, and our job is not to predict but to trade facts. So the fact is we are after possible buys. Now, to validate a reversal, the best thing to do is to get false breaks and then higher highs. After that, normally what we do is we are looking to buy retraces. Okay? The alternative for that is to start and develop a bullish trend. Bullish trend is developed when you have higher highs, higher lows. This is the pure definition, price action definition for a bullish trend. Higher highs, higher lows. And we need three of them. Why three? Because less than three stays as a definition for corrective cycle, A, B, C, D, or 1, 2, 3, 4. And after that, normally, we have the trend continuation. And that's exactly what we have right now on the euro dollar. This. How it will develop from this level, we can't know. And as I said before, we are trading facts. The fact is that we don't have a setup to trade for the buys yet. This looks like a beautiful false breakout, but we don't have two candles rule applied here. Therefore, this cannot be used as a valid higher highs after as a valid convergence idea, for example. These two waves are yet only two, and we have bearish divergence between them developing. So who will take the control here? Bulls? Bears? Whatever the answer would be, it will be answer of a wish, not of a fact, because at this moment there are no facts. So as for the longer term for the euro dollar, we do want to see this created, and then we can easily start looking for the buys. And alternatively, if that's to hold the double wave and to break the trend line, then the euro is likely to do one more low, something like 111 or 110 area. So personally, I would prefer to wait for the buy setups here. No, we don't have them ready. Yes, we have all the reasons for them to start and be created soon. The question is which direction the market would choose as for now. We need still to wait. It might take a day, it might take two, it might take a week, but we can't force things that aren't yet correct. And as long as we don't have the bullish turnaround, the assumption is that we are still under potential lower lows to be created. That's for the euro. If you have any questions, guys, about anything I explained, please don't run forward about anything before I explain it. Okay? But if you have any questions about anything I explained, please write down and I will answer. The next one on the list, euro versus the pound. Now this one is for long term. Quick reminder here, because I have nothing new to say from the last several weeks with this one. We are trading this triple and double scenario, which could take us all the way down to 50% of the weekly triple cycle. We are after sales. Now, in order to be able to enjoy the long-term ride, the different time frames have to be in synchronization. While weekly is bearish, daily was double cycle with bullish divergence and a corrective cycle to be created. Corrective cycle, as you know already, could be two waves or a range. For range to be validated, it has to create two false breaks. One was created here. The second one was created here. So we are in both acceptable scenarios for this pair. It could still move inside the range before the next serious move takes place, or it could simply go and create for us two waves, 1, 2, and then continue the sells. On the short term, as long as these lows basically hold, drops could provide opportunities for buys. Of course, if you can find a good entry using your techniques, right? Your strategies, your systems, your robots, whatever the strategies you have for entries, and everyone use something different. Someone for scalping, someone for shorter, someone with the trend, someone with reversals, and so on. So whatever is your style, you first of all need to remember the directions. On the short term, we can still play here little to the upside. For those of you like myself who are looking for the long term, what you will want to see is a hold on the top of the range with bearish evidences like bearish divergence, like a cycle on the lower time frame, or a false breakout on lower lows. We would want to look for sell setups. Okay, so the plan for the euro pound remains the same. We are looking to sell the rallies. Currently, the pair is approaching to the top of the 4-hour chart range, and this is the place where we possibly be looking for the next sells. What we will want to see here is again an evidence, a bearish evidence for the pair to be ready and prepared for continuation. So my long term for the euro pound was and remains look to sell the rallies. Same exactly with the euro versus the Aussie. However, this one is just a bit different, and here is why. So for the long term, quick reminder, we are after sells here, triple cycle, bearish divergence. We require corrective cycle. Corrective cycle could be in two waves. Corrective cycle could be in a range as well. This or other way around, we're still after sells. As I mentioned before when I was talking about the euro versus the pound, that in order to be able to enjoy big moves and trending moves, what we want to see is synchronization for a few time frames, meaning weekly and daily, for example, to give us the same. But here comes the but. Daily was the first move down. Then we got a range here, ranging correction, right? So one impulsive wave down, correction, and then we expect this continuation. Now look what happens. Daily is in the bottom of the range, and 4-hour at that very moment, at that very place, is a cycle. 161.8 of this double cycle, where each of the legs is a cycle by itself. Which means we can see a correction taking place. How does correction look like? You already know that. Two waves or a range. For a range, we require two false breaks. As for now, we have only one. But range sometimes could be as a pattern and not as a flat consolidation. So for the euro versus the pound, versus the Aussie, sorry, what we do want to see is clear two waves or clear range, and it's pretty early to decide how exactly that would be, right? And then apply the sell opportunity. So the expectations here are still for short-term correction. That means it could continue to zigzag here inside. It could suddenly retrace up a bit, but the plan would be and will remain, as for now, look to sell the rallies. Okay, the last opportunity for the sells, for valid sell, was right here with the bearish hidden divergence from previous week, which was confirmed with false breakouts and bearish divergence on the 1-hour chart, which made the continuation down and was blocked and finished as for now by this double bottom with a bullish divergence. That's always a good place to make some money, and now wait for the next setup. So that could be, as I said before, 1, 2, and then continuation. It could simply go and create some kind of a range here, and then we will be again looking for sell the rallies. Long-term plan was and remains sell the rallies. What could we do on the short term if we get some good buy setup, like here with the double bottom and bullish divergence? Can we actually go and buy when such created? Of course. If your 4-hour chart is verified on the 1-hour chart as a setup as well, you can go and enjoy it. Just remember, because you are trading short term, when you get signs against you, take the money. This is very, very important because, again, sometimes the wish to make hundreds of points make us close the eyes to the reality and makes us to forget on what time frame and what kind of size of movements we can enjoy from. 4-hour and 1-hour bring small moves normally. Daily and 4-hour bring bigger moves. Daily and weekly bring even bigger moves. So depends on the synchronization you work with and the multi-time frames you work with. Depends on that would be the move you can expect. When you work like here, 4-hour and 1-hour, you do want to make sure you put the money in the pocket once you have signs against you, or at least risk-free your position. Okay, so my plan for the Euro Aussie, looking to sell the rallies. For those of you who are looking to trade these possible rallies, what you want to do is to find bullish evidence on 2 time frames, because it's short term, 4-hour and 1-hour, basically to be together bullish for you. Okay, that's what you want to do, and then you can enjoy some short-term buys. My plan for long-term would remain sell the rallies. EuroCAD, also long-term trade here, and then we will discuss about few short terms. So EuroCAD, my long-term plan: sell due to the triple cycle from the monthly. So 1, 2. So for that to happen, weekly must be with the monthly. This was the first monthly leg. It was a triple cycle on the weekly. Then we got a corrective cycle in a range. And the plan for now is sell every rally. Pretty simple, right? Straight to the point. Daily chart must fit in. The last daily evidence was this moving average divergence, or you can call that even some kind of potential bullish hidden. That means there should be a short-term corrective cycle. This is what you get on the 4-hour. Okay, that's exactly what you get here. So on the 4-hour chart, this is what we face: triple, double, with bearish divergence continuation. We can start looking for the sells. Note, here's a little note, That was a pretty straightforward move. After such moves, sometimes what the market do is longer term correction. So this is doable on the euro versus the CAD. Will that happen or not? There is no way to know. Don't try to guess, but it's very, very possible. And moreover, it is possible because this first leg from the 4 hour is a triple cycle on the 1 hour, and that's what could easily make it to be like this. Again, we can't guess, we can't know, because our plan, according to the long term, is sell the rallies. So whatever the combos of the rallies will happen, it's a sell for us. A valid sell conditions. Now we should be looking if we get a setup that fit in. Again, using your strategies, of course. Okay, so the plan here is sell the rallies. And that could simply hold this top and crash, continue to crash, or just because what I showed you with the vertical idea of movement, it could simply take slightly longer, create here some kind of longer divergence, and then make them continuation down. So remember that if when you trade, and if you trade this pair, just remember when you have signs against you, money in the pocket. Don't let your winners turn possible losers. Very important. And sell the rallies would remain the plan, even if that would do a little reversal. Again, it will not change the plan, and it's very important to remember that, because many traders forget it and then say, oh, but it's bullish now, so what? Of course it might be bullish in some periods, so what? That's not what changes the game direction or cycle. Okay, that's what you want to see in order to be able to continue with the longer term. That's how it's supposed to develop. It's very rare to see market goes only one wave. Sometimes it will go against you. That's how structures are built. Remember that. Euro versus the Kiwi is my next one. Now for the long term, I am bullish here, but we do need to pay attention to what? First of all, why am I bullish for the long term? This structure is something that I love. Bullish triple double, bullish divergence, bullish false break. For me, it's something like that. Will that work or not? Only time will say. And also the daily fits in perfectly. That was a first special cycle. That was the second weekly leg, and that was kind of a triple cycle here. Looks perfect. And I just remind you, previous week what we did was this false breakout. We were after retraces on the lower time frame and setups. That was the one that we got. We got a bullish hidden divergence, and we became bullish in one of the two scenarios. One of the scenarios was to see a low here with a bullish divergence and then the breakout. Second scenario was to break above the trend line. And we can see the price movement since. The question is what's coming next. While the long term still remains bullish, and the 4 hour now fits in perfectly in a bullish definition of a trend, we would expect some retraces down on the short term and then looking to buy again with the next bullish evidences to be built and regained. What are the levels we can look for possible bearish reaction? So we have the 100 level here. 100 level of the cycle would not be relevant in a double cycle if the second leg is bigger than the first leg, which is the case. But because we are building that not just double cycle but triple push, 100 level would be relevant if it fits with other level, and it does. And this is what we get. These are the last lows in the previous move down. This is where the stop loss area is located. So we can see some dents here, some spike here, maybe clearing this stop losses area, building the way here, and making the retrace. So on the lower time frame, what you will want to see this is a reversal sign. How do we verify reversals? By a rule of thumb, normally there are two approaches that I work with. Approach number one is false breaks and lower lows. After that, looking for seller rallies. Approach number two, lower highs, lower lows to verify and identify the bearish principle of a trend, and then sell the rallies. Do we have anything of this? As for now, nada. The answer is not. So should we go and rush into a sell here? No. Now you can imagine how many traders jump in a sell here because there is divergence, because there is resistance, because there is just because here and then here and then here and then here. The market will make the move once these early attackers would get disappointed. That's pretty much what normally happens. The early attackers, those who can't wait for a setup, those who create a setup, those who trade by belief and not a fact, trade early, lose early, and then comes the market and creates the setup. Okay, that's what normally happens. So don't rush, wait for your setup, verify that, and then you can always go and trade it. But let the setup happen. And I will repeat that, let the setup happen. Don't find yourself convincing yourself there will be setup. You are looking to trade against the bigger time frame right now. Why would you try to guess where will be the reversal? You are not trying to join a trend. You are trying to go against it. Why would you try to do that before you get a verification? Okay? So remember that when you run against the wind, you want to choose this road that would have the least resistance against you. Remember that. So that's for the Euro Kiwi and the possibilities for our short term. After we will get the some retraces, we would be looking to go and enjoy the long term once again. And for all those of you who manage the positions from early previous week, just remember, do not let your winner turn into a loser. You have signs against you, apply management. Any kind of stop loss to break even, trailing stop loss, partial cash out, full cash out, attack with retraces, whatever fits in your trading style, strategies, systems, or methods you work with. But do that. It's much smarter to listen to the market than to try to say it will just be fine. So that's for the euro, and the last one, Euro Kiwi, and the last one on the euro list is the euro versus the franc. The idea is, as long as the weekly did not tick up as divergence, and that still didn't happen because this week is just started, has just started. So as long as that didn't happen, we could go and see the euro franc reversing in here with a hidden divergence. And that's pretty much the assumption. Why? Because while the weekly has the divergence, the daily does not have divergence on this part. So I think we might get something like that. And that's what I plan to trade. So for that to happen, daily is building up a bearish hidden divergence for our 2-bit double cycle. And this is what it is. Each of the legs from the 4-hour have to be cycled by itself on the 1-hour. First one is a leg by itself, no doubt. Sorry, like this. And then the second one comes here, and that's very likely what will happen. This is a stop loss zone. A lot of stop losses located here for the early sellers. We do want to see some clearance around this area and possible sell to take place. That the way I see that should happen within the next day or two. So my personal view, look for sell setups. That's personally how I think this pair would go. Now, what will happen from this moment? There are two ways. First of all, one more low on the daily, as just explained. This is what I personally think would happen, what will happen. But there is a possibility that we are about to face just triple, double, and hold, and a reversal. Very, very strong possibility. It doesn't change our plan as for now, which is look for sell setup at the end of the current rally. Very important levels for that would be 61.8, which is currently, and 100. That's very two interesting levels to watch for the retraces possibly to start and to happen. Okay, that's all for the euros. Questions? If you have any questions, guys, that's your time. Please write it down if any of the euros isn't clear. Just want to repeat, if I don't cover any of the pairs, it's simply because I don't see anything clear there, like the euro yen, for example. And if I don't see anything clear, I prefer not to deal with that. Good, so no questions. Wonderful. That's one of the two options relevant here. Or I scared you enough, or everything is clear enough. So I hope this is option number 2. The next one's pound. Now, while the pound dollar stopped being clear to me, as for now, there is a lack of stability in the fundamental view. So that could be easily a range. It could be easily deeper to waves. As for now, it's impossible to verify here anything. Moreover, we are stuck inside the last two candles from the daily chart, and I don't like, these are the two candles I refer to, of course, here. And I don't like such situations. It normally means there is no flow of money in the market. If there is no flow in the money of the market, I don't want to make my money flow without a good momentum. So I don't see pound dollar as clear opportunity for the short term. My long-term plan, though, would be definitely look for buy setups. I just don't see anything new and clear here. That's pretty much it. So the only pounds I see on my list as interesting is pound franc and pound CAD. I will explain both. So pound franc, my bullish assumption for the long term derives from here. With a bullish divergence, I believe a very bullish future is awaiting for this pair. But who is going to trade it for years now? Most likely no one in this room. So the weekly has to fit in the monthly in order to provide us a good possible confirmation for the buys. We had triple cycle up, double cycle correction, bullish divergence, bullish false breakout, and higher highs. Can that get better for the long term? No. The assumption is only buys, buys, buys. So let's see if the daily fits in and provide us its own sell opportunity. So what we have here is triple. Now that might be looked like a double, and we could say easily yes, but we're stuck in two candles. Yes, we do have a bullish hidden divergence. This is why I am still bullish here in my mind. But the fact it was only one leg correction could make the pound franc basically do this. Will that change anything of the long-term plan? No. And for us, it doesn't change nothing because we are looking for the buys. To be able to enjoy from the last daily divergence as bullish, what you will want to see is 4 hour to be bullish as well. 4 hour was bullish beautifully previous week here. And this was what we traded. But after that, as discussed also previous week, we got simply two-wave idea push with a bearish hidden divergence. At that moment, we lost the synchronization between the short term and the higher time frame. And that's situations that normally bring lack of stability for a pair, some kind of ranges, some kind of zigzags. What happens with this pair currently? That there is no synchronization in the short term and the long term. So what we are looking to do is, or to create another bullish hidden divergence, bullish evidence and divergence, and look for buy setups. It can easily make some kind of a range and breakout and then go with this direction. Or ideally, as shown before, on a daily, we get one more low. This becomes as a daily double cycle. 4 hour fits in with some bullish divergence, and then boom, a serious buy attack. So for pound franc, I'm after buys, and for long term, for that to happen, these time frames would have to synchronize. If they will, we trade. Okay, so keep in mind. And pound CAD, here we are. What do we have for this pair? So we don't have any cycle in trade here, but we do have here a structure of a possible bullish channel, meaning we are looking for retraces and further buys. Watching on a daily chart, this one has such levels and such levels as well. It's building up a bullish hidden divergence, and therefore this becomes as a buy area. So what we want to see on the pound CAD is the daily to form its bullish hidden divergence, 4 hour to form its divergence, and the pair to start to create for us one of the two structures, higher highs, higher lows, and then we are after buy retraces, or false breakout, higher highs, and then we are looking for buy setups. So pound CAD, look for the bottom to establish, and that might happen any moment. We don't know exactly when it will, and provide a beautiful buy opportunity. Again, it could be any of the two variations. False breaks higher highs and buy retraces, or higher highs, higher lows, and buy retraces again. Any of the verification for a trade to turn up again. Okay, that's pound CAD. These are the two interesting pounds I have on my list. Next one's Australians, Aussie dollar. Long story short, I'm after buys here only for this reason. Massive special cycle, bullish divergence, bullish kicker on the monthly chart. Weekly had triple cycle, bullish divergence, and that's pretty much the last pressure. Daily had trend and breakout, last divergence in before the trend and was bullish here, and after that we are stuck in some kind of a range. The assumption is very simple. As long as the low holds, we are after buys and buys only. That's pretty much it. On the 4 hour chart, this is what we're facing. 3 higher highs, higher lows, correction, and since then that's what the pair is trying to do. So as long as this structure holds, we're bullish. As simple as that. Nothing more to say here. Looking for buy setups as long as that simply holds. This is a bullish verification from all the time frames. And as long as it holds and maintains, the idea is buy retraces. As simple as that. Aussie Kiwi, one of our monsters. We are bullish since here. The break of this high, and we are riding. So I do think we are coming to some critical levels like 106, 107. This is sorry. That's the triple cycle. I'll ignore the one-time movement here. This is our levels 106.20 and then 107.20. Critical zones where I would believe there will be some fight and some bearish pressure would begin, which after we would be buy again, but that's pretty much it. So the way I see that, this is what the market is building up for us. One, it's no way to market two candles here, but we have two waves correction, two, and something like three. That should establish itself there with this divergence developing. We should face some corrections, and then we'll be looking for the buys again. So once again, 106 plus up to 107. That's where we will want to see the verifications for possible short-term sells. How do we verify? We go to 4 hour and confirm divergence, which we already starts to see in play. And the 1 hour, you already know that I was talking about it today and many times in the past. False breakouts and lower lows, and the alternative lower highs, lower lows, and then sell the rallies. Have your eye there. Short-term opportunity are very likely to build during this week and start to provide possible short-term sells. For all those of you who are riding the buys here for some time now, the good place to cash out partials would be exactly the place where we would face possible short-term reversals signs. And the last one of the Aussies, Aussie versus the franc. We are bullish. Same story exactly. Last divergence in play from the weekly is bullish, as basically all the Aussies. We have the structure from previous week of higher highs, higher lows. And our plan, buy. Bullish hidden divergence is the last thing here. That might face some kind of short-term fights, no problems. Our plan would still remain buy retraces. We are bullish, looking for buys only. And for all those of you who are involved with the 4 hour chart bullish hidden divergence and 1 hour chart confirmation, what you would want to do in that case is, this is the confirmation I'm talking about, of course, trendline breakout, bullish divergence, and a rally. So once you get your risk reward and you get your signs against coming from the 1 hour and the 4 hour divergence, put the money in the pocket, or at least partial, apply some kind of a management. Don't let your winner turn a loser, and enjoy your profits. As simple as that. This is for the Aussies. New Zealandian Canadian, one of our best trades. We were riding here. Since this moment, we were looking for the sells. Now this pair is finalizing the first portion of the sells by making 3 lower swing highs and lower lows. This is the place where I would expect a slowdown. We are developing the divergence here. Daily also, look at that, bend to bend, so up to 50%. This is an acceptable deviation. This is where I would expect the pair to be blocked. A bullish hidden divergence possibly to be created here as well. Sorry, no, can't go, my mistake. It can't cross through. So the only thing we do have here is this possibility, and this is what we will be facing very likely on the short term. So the 4 hour chart I would expect to be blocked here, start to create a slowdown and the reversals. How do we would be looking for short-term rallies and then back to sells. Why are we short-term rallies? Just explained. Why are we for long-term sales? Because we are in a structure here of 3 lower highs, double wave correction. So as long as this holds, we would be looking for that. Now, how do we apply the possible buys? We would want to see reversal patterns. What is the reversal pattern? Same as I'm always talking about, false breaks and higher highs. And then we start to look for retraces and buy, or higher highs, higher lows, buy retrace. And cat franc. Our bullish view remains on. We became bulls from previous week. No, sorry, 2 weeks ago. With this bullish evidence divergence. Previous week we got the trend line broken. 4 hour went into confirmation. So we got the higher highs, higher lows. We got the 2 wave structure retraced down. No 2 candles in classical play here. Bullish hidden divergence. And now we have the structure breakout. So what we got here is first trend up, structure, breakout. So the expectations would remain bullish. Okay, so our plan is buys. Our invalidation was and remains this. Last 2 forex pairs before we move on to commodities. Before I go to dollar yen, dollar franc, do you guys have any questions about anything explained so far? If yes, please write it down so I'm able to answer. Just please, guys, again, if you're not comfortable to ask here and you still will face any questions later on, don't keep it for yourself. Don't keep it for yourself. Ask. We have the Telegram groups active always for you, available always for you. Don't keep questions for yourself. If you find yourself trying to figure out the doubts, you might get not the correct answer. Okay, I understand the natural, normal feeling that people afraid to ask stupid questions, but my approach, there are no stupid questions. The only stupid thing to do is not to ask the questions, because then you don't get the answers. If you don't get the answers, you would find yourself doing things that maybe you shouldn't be doing, and then wondering why it doesn't work. So in order to avoid that, be smarter. Ask the questions. So the next 2 forex pairs, dollar franc and dollar yen. I'll start with the dollar franc. We have a weekly bearish divergence in play, the daily to be corrective cycle, which means 2 waves or a range. Daily has these false breakouts and these false breakouts. So what it could happen here is 1, 2, or yes, we can continue to play inside this range. It will not change the short-term view, because the short-term view is sell the rallies. This is building up to good waves already. The only thing we are missing here a bit is the level. So, well, theoretically missing, because by ideally we should clean that. That's pretty much it. So we can start look for retraces down again for any of the levels. Short term is sell. Longer term is once we get the second leg, assuming we will be back to buys. The reason for that would be this long term assumption that we are going up, just something like that. So that's pretty much it. So short term sell the rallies is the plan for dollar franc. Now dollar yen, previous week I was looking for sells as long as this trend line holds, and I was looking for sells once this trend line would be broken down. This trend line was never broken down. What did happen, sorry, was the break of this bearish trend line and invalidation of a level here. And this invalidation takes the pair back to the possibility that we are building up here a double cycle before the next possible bearish scenario. So I do not see anything clear and obvious for the dollar yen. As for now, the reason is because weekly is developing possible bearish hidden divergence, while daily still can't confirm its divergence. Therefore, dollar yen, as for now, for me, is neutral. I prefer to wait rather than try to make any wrong decision. I think there is a good chance we are going up to 113, 114, but again, I wouldn't trade it. I do not trade against potential divergences from higher time frames, and since this one is basically does that exactly, I move neutral to the dollar versus the yen. So there are two pairs that we moved neutral from previous week to this week. This week is pound dollar and the dollar yen. These two are neutral. The rest ones are the hottest ones on my list, as I showed before. Kiwi CAD, one of my favorites. Euro Aussie, Euro CAD is something that I love a lot. Rest of the European pairs, of course, Australian pairs, I love them. Since from previous week we have good runs there, and also some commodities which I'm going to explain next. Gold and silver, we are after long-term buys here again because this buy was activated. Bullish divergence came in play, and that's a possibility for continuation. Keep in mind that because of the previous structure like that, we still might face one more attempt to go lower and clean 50% or close to that. So basically expand double wave correction. It will not change the long-term plan, which will remain bullish. However, we did have already false breakout. We already have higher highs. Gold is ready for the buys. And as long as the low holds, my plan would be look for buys. If it will invalidate the low, I would be neutral for some time until the next divergence and plan would come in play. But meanwhile, I am bullish. Same exactly with silver, which created what we were hunting for a good while now. Bullish, bullish, breakout, bullish, 4-hour false breakout and higher highs. So the idea here is look for the buys. As simple as that. Invalidation, last low. So I can't develop here more, and we don't need because well, first of all, we are following it for a few weeks now. Second, because it's pretty obvious by the structure I was talking about so many times this meeting and each meeting. Triple, double. Bullish divergence, bullish false break on a lower time frame, bullish higher highs and convergence. Small potential risk, look for the buy setup. Small potential risk, huge potential profit if that really is a place where we're ready for the rally. And the last one is the oil, which we are hunting the level of 64.65, and we are right there right now. So what do we have here? A meeting of two cycles. This is the area. Bearish divergence developing on a daily chart. RSI coming very close to its own extreme 80. Daily divergence and 4-hour chart develops its own. Critical place. Divergence developing as well. I think we should start looking for sell setups here. But we don't need to guess will there be a sell or not. We need to verify that. And we do verify that how? By false breaks and lower lows. Do we have that as for now? No. So that's still a possibility. 1 or 2 false breaks, right? Then we want lower lows and then sell the rallies. Or the alternative is always lower highs, lower lows, 3 of them, and sell the rallies. So have your eyes ready, have your plan ready, but wait for the trigger. Do not, and I repeat, do not try to guess where will be the top. Many traders did, many traders failed, many traders will do, many traders will fail, and you don't want to be part of the statistics. From one view, it might improve your ego by calling a top accurately and say, you see, I told you, it crashes. But for long term, that's not a strategy you would want to apply for yourself. Trust me on that. I've been there a lot of times in the past. It feels good when you catch it. The problem is that in order to catch one, you need to lose other 9. You don't want to be there. Wait for official signs. Remember that. And indices, as for now, I keep my neutral view. There is nothing new I can see as per setup. So nothing to do here. From my point of view, waiting for clear setup. At this stage, neutral. So that's pretty much it, guys, for the beginning of this week. Thank you very much for being here. I wish you a wonderful day, evening, and trading week. Tomorrow, Jordan is with you. I'll see you again on Wednesday, and I'll see you a bit later once I'm finished with my report in the Telegram groups. Thank you, guys. I wish you wonderful trading, and see you soon. Bye for now.